Thank you for joining us tonight. You're watching Squawk. I'm Bruce Whitfield on CNBC Africa, first in business worldwide. In the next 30 minutes, we'll dig into the latest financial news and market stories. David Shapiro away. We sent him off to Cape Town with the whole budget team. So we're joined at the desk this evening by Nerina Visser from Nedbank Capital and Chris Gilmore from ABSA Investments. We look at the budget, and Nerina, well, a lot of people are quite impressed by the budget. I thought it was incredibly dull. I like to describe it as the octopus budget. If you superimpose Pravin Gordhan's face onto an octopus, you then take the 8 legs of the octopus, you pull them all in different directions, you get the big surprised look on the octopus face. That's how I felt the poor finance minister was yesterday, being pulled apart by 8 different vested interests coming through.
I think it's a very good analogy, except that I don't think there was a surprised look on his face. He knew exactly what he was doing. He was very much in control, and it was very reassuring, certainly not just for South African investors, but it must have been reassuring, I think, for many international investors also, that yes, it was a dull budget, it was a boring budget, but boring is good in the context of investment friendly. Predictability is good, and I think the whole medium-term budget framework that we've had in recent years have put us in this position, and therefore very reassuring to have him on a day like yesterday come out and really not shock or surprise us at all.
So good, so investor friendly, so much for building confidence that 3 ratings agencies came out with negative, neutral and positive on the budget. Chris Gilmore, is that the ratings agencies being schizophrenic, or do we not just have a clear enough policy?
Well, add them all up and you get nice and neutral.
Nice average.
You see, and that's actually very good. No, look, I think it was a very pragmatic budget in many ways. And the way I read it also is he's throwing out a kind of olive branch. He's saying to business particularly, guys, come and join us, because governments here and in the rest of the world, they don't create jobs other than in a bloated civil service. But what they can do is provide the enabling environment for companies and other constituencies to come in and build this economy.
I was at a budget breakfast this morning, and Jerry Vilakazi was one of the speakers. He was member of their National Development Plan, and he was saying that the big change, and Jen Sita from Ernst & Young as well, saying the big change from last year to this year, post-Mangaung, is that business has been consulted twice since Mangaung in terms of big policy directions. Mangaung has actually been a pivotal point for the future of South Africa in terms of this, okay, we might not like each other very much, politicians and business, but we better work together, otherwise this thing doesn't work for everybody.
I think that's a very fair comment, and it would be interesting to know what role Cyril Ramaphosa has played in all of this, whether, as he said, he would be playing more behind the scenes. This is not about him suddenly becoming the vice president of the country, he is of the ANC, but I think it clearly shows that him understanding the business environment a lot more also understands that these parties need to work together.
Blah blah fish paste. We're repeating a lot of stuff that's said on other channels. On this channel, people talk about this all the time. How does this build the base for growth into the future?
If you look at the NDP, the National Development Plan, they're talking about 10, 15, 20-year approach to things. And the wish, if you like, in the State of the Nation address is that we treble the size of the economy in 17 years. That's a very ambitious thing to do. And if you go and actually work it out, it means we've got to grow at 6.7% per annum compounded for the next 70 years. That's ambitious, probably not going to happen.
If the best case scenario, we get to a position where we might be growing at 6% within the next 6 or 7 years.
Yeah, and look, bear in mind that Eskom wouldn't be able to cope with that as things currently stand. So that is very ambitious. But if you do get the private sector coming in, don't forget the private sector is currently sitting on R1 trillion worth of cash that it wants to invest.
Does this budget encourage them to spend that money, invest that money?
Maybe not yet, but I think it's making the right noises. And eventually that has to happen. Because if you compare ourselves with the other components of BRICS, okay, Brazil, Russia, India, China, they're generally speaking growing at far higher growth rates than we are. Pravin Gordhan himself said a couple of years ago, we need to grow at 7% per annum for the next 20 to 30 years to make any meaningful dent in unemployment. And it's right. So can we get there? Yes, theoretically we can. How do we do it? And that comes back to your original point. You only do it by embracing the other parts of the community, basically.
Okay, so we feel embraced, do we? Do we feel embraced?
Well, not necessarily, but I think, coming back to the question of is this actually putting things in place for the future of growth? Absolutely. I do think that's what we're looking at here. And how will we grow the economy to double? Forget 2.5 or 3.5, whatever the GDP percentage growth rate is. That's almost irrelevant. It's about, can we actually educate our people? Can we employ our people?
Do the 60% of South African households, 59% of South African households that live on less than 2,500 rand a month give a damn?
Do they feel embraced? I think you could ask exactly the same questions to those that live below the breadline to the ones that feel that they are carrying this entire can by themselves. And I think you would get very similar answers. Do they feel embraced? No, not necessarily. Coming back to your analogy of the octopus, it's been a very fine balancing act that he's had to carry, and I think he's done it quite well.
Are there two shares that benefit from this budget? One each. Is there a share that you would buy today based on... I'll give you a few minutes to ponder it in the back of your mind while we talk about other things. And before we go to the break, I'll ask you each for a share. Have a backup just in case the other person has chosen it first. But is there a share based on Budget 2013 that you think is worth buying and holding for the period of the National Development Plan? What is going to be the theme that carries a particular company through the next 20 years? Let's talk a bit about some of the big stories on the week, and a little bit like Mampela Rampele launching her political platform at a time where Oscar Pistorius was dominating the news. She really didn't get enough airplay on that. Comair comes out with a quite sensational story that it is taking SAA, Department of Transport, the Treasury, public enterprises to court because of what it regards as the illegal support of SAA. Launches the story on Saturday. It's drowned out by the budget. Maybe the story will resurface again next week, but let's do our bit to highlight it. It's a courageous story. I mean, you had a proper job once as a journalist, didn't you, Chris? I mean, you understand what a good story this is.
Fantastic story. And I heard Eric Fenter talking to you on the radio, on your radio show the other night about it. And, you know, from a purely logical perspective, there's an awful lot of substance to it.
Yeah.
And, you know, it does appear, certainly the way that I've heard it, that SAA is effectively ignoring all of the legal framework that was put down in 1991 when the whole airline industry was deregulated. Yeah. So I think, and Eric Fenter is very, very articulate and very erudite, and he put his case exceptionally well, and basically saying, well, you know what, let's stick to those principles. SAA, if you want to go offshore and carry the flag, fly the flag for South Africa in the rest of the world, that's fine. No one's going to argue you can do whatever you like. But as far as the local market is concerned, you really are abusing your position.
Absolutely. We run the risk, of course, after years of enjoying practically free flights, of now having flights going up considerably, but then we open the landscape once again for proper low-cost airlines and maybe reinvigorate that industry again. That would be exciting, Lorena.
Yes, it certainly would. I think this also brings to question the whole idea of who regulates the regulator, or who watches the watchdog. You know, clearly this is the sort of argument that should be going in front of the Competitions Commission. But who's the Competition Commission and who pays their salaries? So I think it's a great story, and I think it's one that really needs a lot of support from anybody who's truly interested in a democracy and a free market capital system, because that is really what is required to improve these efficiencies that we're talking about. You know, if we tie it back to the budget again, what are we looking at here? It's not as though there's a lack of money. It's about how does it get spent? Does it spent efficiently? You know, and where and how does that get allocated?
One of my favourite perspectives on this whole SAA bailout issue is Leon Lowe from the Free Market Foundation. Says, you and I travel on SAA subsidised by the poor because money is taken from projects that should be benefiting the poor and put into subsidising SAA. It's an absolutely perverse situation for SAA to be operating under those circumstances. So we watched that story with a great deal of interest. Liberty results, those came out earlier today. You look at Liberty's results, you look at Standard Bank's trading update recently in which it said it was growing its earnings by about 20% based on the sale of the old Bank Boston in Argentina based on Liberty. It doesn't look like Standard Bank's growing at all. You're from rival banks, which is great fun. Let's have a go at Standard Bank. Is there any growth in Standard Bank based on what we see, 38% growth coming out of Liberty and the sale of Standard Bank Argentina?
Probably not when you look at it just at that sort of level, but this is not about having a go at a rival bank. I think this is rather about what's happening in the banking industry and in the financial industry and who is best equipped to actually deal with those changes. And these are also global changes. If you look at the impact of regulations, if you look at the difficulties of actually dealing with new markets, Standard Bank has been in Africa for many, many years. It's been an expensive exercise for them. We've got ABSA coming along and saying, you know what, we actually have a quick and entry into Africa. Will it be better or easier for them than it's been for Standard Bank? Who knows? Nedbank, on the other hand, is now taking up its option to actually buy the additional stake in EcoBank. Yeah. Will that be the best option? Who knows? You know, we can sit here and speculate, but at the end of the day, what we have is an increasingly onerous regulatory environment that makes it a lot more difficult for banking CEOs and boards of directors to actually navigate, negotiate, and generate growth for their shareholders.
Absolutely. You know, it's a tough environment for banks, and which is why I find it really interesting. I saw a report today also that Richard Branson, who's planning to ride the Argus, and you're a fan of a bicycle.
Haven't done it for a while.
And they haven't done it for a while, but you respect the endurance and the fortitude it would take to launch yourself around 109 kilometres of very beautiful coastline while you pant looking at the ground, having done it once. But here's Richard Branson taking on an even bigger challenge, and that is coming into this market. He's done credit cards, they've done some insurance products recently, and now there's talk of going to retail banking. Didn't they pay attention to what happened to Standard Chartered when they bought 2020?
Yeah, no, I have to agree, Bruce. You know, it's all very well having the stated intention to do it, and I can remember vividly what happened with 2020. And Standard Chartered thought they were going to kind of just roll in here and take over. It doesn't work that way. You've really got to pay your dues, your school fees, and it's a tough, grinding environment. And you know, to follow up what Narina was saying, you know, it's a tough regulatory environment as well. So yes, he's got experience in the UK with doing it, and I'm sure that will come in very, very
The credit card experience here has not been spectacular.
Not spectacular.
You know, very sexy. He launched himself off a Santon Sun on a foofy slide, crashed through a bunch of boxes, and drove around the area that happens now actually to be ABSA Capital. That was the car park that he burst into through the cardboard boxes on what was a very momentous day. But the Virgin brand doesn't have the same traction. Nice for gyms. Makeup didn't really work either. And our credit card's a bit soggy.
What it may be doing is, and we touched on it briefly, is the rest of Africa.
Yeah.
You know, last week I was at a ShopRite presentation, and Whitey Basson put up a wonderful graph of a map of Africa showing where the real growth is. And South Africa and a couple of other countries in Africa are growing at less than 3%.
Yeah.
The rest of it's pumping. It's going 5, 8, 9, 10%, you name it. And I think Virgin must be thinking, we'd like a slice of that action as well. You know, it's a very, very difficult market, obviously, logistically and otherwise. As Whitey Basson says, Africa is not for sissies. But I think that is why so many multinationals, like Walmart, maybe like Virgin, are coming in here, seeing this as a good bridgehead into the rest of the continent.
There we go. That's a nice perspective on that one. What are Grindrod's results? Really, really strong here in an environment where global trade is really not that fantastic. Grindrod's growing 22%. That's a really nice number.
Yeah, although if you strip out the logistics side and the freight handling side, you know, the shipping side isn't looking good at all.
Okay.
And you know, you got an awful lot of spare capacity floating around.
They diversified 5-6 years ago.
Well, exactly. No, it's paying off. No, you're right.
They're building a new head office, though. I've noticed that, you see, and it's the kiss of death, isn't it? Protea placed in Santon. They're busy going through the process right now. MMI, that insurance space, quite dull, not particularly interesting. MMI, though, seems to be doing all right.
Yeah, I think they're obviously still consolidating after all the mergers and the grouping together and so on. So I think there's still some further benefit to be had there, but nothing really spectacular that sort of grabbed our attention at this stage.
But what do we like? Imperial. We love Imperial. Imperial's been spectacular, but even it, after years of sort of consolidating the massive empire built by Bill Lynch, they've put it into more accounting, sort of easily to understand blocks, and they've done a really good job at that. But Hubert Brody's beginning to look like he's needs some new ideas.
Look, I think Hubert's done a fantastic job. If you look at Imperial 5 years ago and you look at it today, I mean, you can hardly recognise it. The surgery has been so profound. You're right. I mean, what 14% growth? But again, Africa is starting to appear on the radar screens. So I think you know, maybe one of the messages that's coming through loud and clear from a lot of the results we're getting now is that South Africa at this point in time not looking so interesting. The rest of Africa is looking much more interesting. Hopefully, going back to what we said a few moments ago about the budget and embracing all sorts of different constituencies, we're going to see much more robust and sustainable growth here. But in the meantime, I think Africa does have a lot more appeal.
But doesn't this undermine South Africa's own environment, where you've got these companies with all of this money sitting on balance sheets, so that are taking their growth prospects into the rest of the continent and kind of happy to let the base fester at home and not do particularly much? Is that a risk?
I think definitely, and I think it's a very good analogy and assessment to use there. The concern is that if you are doing it on the basis of, let me rather get away from the home base that's not so happy and go and play in a different yard where I don't have to clean up the mess.
Sage, Old Mutual,
yes.
Remember those lessons. Yes.
And at the end of the day, what you're finding is it's only the benefits of playing in the different yard that comes back to or accrues to South African shareholders. So you're bringing your profits and your earnings and dividends, you're bringing that back. But unless you actually invest the home base as well, eventually it becomes too mushy and you can't stand any longer. So it's important, I think, that in terms of what we had in the budget of putting participating in the infrastructure, and I'm now not just talking about roads and transport type of infrastructure, but infrastructure also in terms of education, job creation, that sort of thing, that the working together with business and government takes place, so that we actually have a much stronger base to provide us this stepping stone into Africa, because South Africa is still very, very well positioned, fast being overtaken by the likes of Nigeria in terms of almost a preferred access point, Mauritius in terms of a financial destination. So yes, you know, the competition is breathing down our necks, but by working together we can actually steady the base and firm the base in South Africa and actually participate in this great growth story that's Africa.